Imagine a company whose uh, core product sales are just shrinking, like their profit margins have just been sliced in half,
Yeah, it's definitely a tough spot.
and their legendary flagship models are quietly being killed off.
Hmm.
I mean, if you looked at those fundamentals in a vacuum, you would probably assume that company is in a total death spiral.
Oh, for sure.
But now, imagine that exact same company is currently valued by the market at $1.5 trillion.
It creates this massive cognitive dissonance. I mean, you are looking at a shrinking automotive business on paper,
Right.
but the market is pricing it as, the most valuable artificial intelligence and robotics platform on Earth.
Exactly. So today we are conducting a full analysis on TSLA. Our mission for this deep dive is to figure out how a struggling car company is convincing the world to buy into this trillion-dollar AI dream.
It's a huge question.
It really is. I've got a massive stack of sources on the table today. We're pulling from Tesla's 2025 10K report, ARK Invest valuation models, some bottom-up financial analyst notes, and the latest news surrounding SpaceX's historic upcoming IPO.
Lots of ground to cover.
Definitely.
Mm.
But right off the bat, I have to give you our mandatory disclaimer. This analysis is for entertainment purposes only. Consult a professional for your specific case.
And the stakes here really are historic. I mean, we are looking at a company at a profound crossroads.
Yeah.
The question isn't just whether the stock goes up or down. The real question is what this company actually is anymore.
Okay, let's unpack this. Because to understand the AI dream, we first have to ground ourselves in what Tesla is actually selling to you and me today.
Right, the actual cars.
Yeah, and the EV landscape right now is just harsh. I was looking through the sources, and Tesla's deliveries fell 8.5% in 2025, down to 1.63 million vehicles.
Which is a huge deal.
It is. And this isn't just a quarterly blip. You're looking at the second consecutive year of decline.
And the broader context makes that shrinkage even more of a reality check, because the global EV market is actually still growing.
Wait, really? The overall market is up?
Yeah, more people are buying EVs than ever before. So if the market is expanding and Tesla's sales are shrinking, it means they are rapidly bleeding market share.
Wow.
And the primary cause of that hemorrhage is sitting right in Shenzhen, China. BYD has officially surpassed Tesla for the global EV crown.
That is just wild to me. It's like watching a heavyweight champion who has been untouchable for a decade
Yeah.
suddenly getting outboxed by this faster, leaner newcomer, right?
Yeah.
It's forcing the champ to change their entire fighting style.
That's exactly what's happening. BYD is leveraging these massive cost advantages.
I really want to understand the mechanism behind BYD's dominance here. How do they swoop in so fast?
Well, it comes down to ruthless vertical integration, specifically in the battery supply chain.
Okay.
BYD started as a battery manufacturer long before they made cars. They pioneered lithium iron phosphate, or LFP, battery technology.
And that's cheaper, right?
Significantly cheaper to produce than the nickel cobalt batteries that the West has historically used. Because BYD mines their own materials and builds their own batteries, they can sell a high-quality EV at a price point that Tesla simply cannot match without taking a loss.
So to fight back, Tesla has had to basically slash their prices.
Exactly.
But when you slash prices to maintain your sales volume, your profit margins absolutely collapse. The numbers show Tesla's operating margins almost halving.
Yeah, the drop is severe.
They went from a highly lucrative 10.8% in 2023 down to just 5.8% in 2025.
And for an automaker, 5.8% is starting to look awfully close to legacy companies like Ford or General Motors. Yeah, I mean, Tesla used to be valued on its industry-leading profitability. That premium is gone.
But there is this one fascinating bright spot hiding in the 10K report.
The energy division.
Yes,
Yeah.
the energy generation and storage division. It just surpassed a 30% profit margin.
Which is incredible.
It's huge. It now contributes over 20% of Tesla's total profit.
It is a phenomenal business, but you have to view it in proportion. Even with that explosive growth, it's not large enough to plug the massive revenue hole left by the declining automotive sales.
Right. Which brings up a strategic pivot from the sources that genuinely shocked me.
Oh, the discontinuations?
Yeah. In Q2 of 2026, Tesla is officially discontinuing the Model S and the Model X,
The absolute classics.
the flagship vehicles that put them on the map. And they are shutting down those lines just to free up factory space for the Optimus robots.
It's a bold move.
But is it? I mean, killing off your flagship cars to build unproven sci-fi robots, that sounds less like a pivot and more like a panic button to me.
Well, it looks like a panic button until you calculate the capital required to stay in the EV race.
Okay, fair point.
Tesla is looking at BYD's structural cost advantage and realizing that a multi-year price war to sell steel on wheels is basically a race to the bottom. So they are voluntarily accelerating their departure from being a traditional EV company.
Wow. It's almost like having a melting ice cube in your hand, right? The legacy EV business is melting fast.
Yeah.
And instead of trying to freeze it, they're using whatever water is left to grow a completely different garden, the AI and robotics ecosystem.
That is a brilliant way to frame it.
But if the core automotive business is shrinking, how is the stock price hovering around $380 to $404? I mean, with a $1.2 to $1.5 trillion market cap, let's talk multiples.
The multiples are where things get really crazy.
Yeah, the valuation paradox here is intense.
Yeah.
Tesla has a trailing PE of around 365x and a forward PE sitting between 143x and 210x.
Which means investors are willing to pay $210 today for just one single dollar of Tesla's estimated profit next year.
I have to push back here. How can a shrinking car company justify trading at 210x forward earnings when an AI giant like NVIDIA trades at just 52x?
What's fascinating here is that the market is entirely ignoring the car business.
Like, completely.
Completely. They are pricing in the robotaxi and Optimus segments, which are totally pre-revenue right now.
And analyst targets are starkly contrasted on this. I mean, ARK Invest has this incredibly bullish model expecting a value of $4,600 per share in 2026.
That's a massive target.
It's based on their capital efficiency improving from $84,000 down to just $2,000 to $7,000 per unit of capacity. But then GLJ Research sets a bear target of just $25.28.
Calling it a broken growth story.
Exactly. So for ARK's $4,600 dream to become a reality, the Cybercab in unsupervised full self-driving, or FSD, must actually be allowed on the road.
Which brings us to the biggest immediate threat.
Right, the regulatory cliff. There's an impending deadline on March 9 from the NHTSA.
The National Highway Traffic Safety Administration.
Yeah, Tesla has delayed providing FSD data twice now, and the NHTSA has escalated its probe to an engineering analysis covering 3.2 million vehicles.
And that's not just a slap on the wrist.
No, it's serious. I was looking at the safety data dilemma from the Austin robotaxi fleet, and it's alarming. One crash every 57,000 miles.
Compare that to the human average.
Right, the human average is one crash every 229,000 miles.
That is a massive discrepancy, and it has broader implications. This isn't just about traffic tickets. It is a make-or-break moment.
How so?
Well, if regulatory approvals stall out city by city, the bridge between Tesla's declining EV revenue and its future AI revenue collapses.
Wow. And the pressure is definitely mounting. There's even a class action lawsuit from shareholders regarding material misrepresentations of FSD effectiveness.
Yeah, the legal and regulatory hurdles are huge right now.
But here's where it gets really interesting. You can't analyze Tesla in a vacuum. It is deeply entangled with Elon Musk's other massive ventures.
Which are making historic moves of their own right now.
Absolutely. Let's talk about the $1.5 trillion SpaceX juggernaut.
Ah, the IPO.
Yes, SpaceX is preparing for a massive $50 billion IPO at a $1.5 trillion valuation, and they just acquired Musk's AI startup, xAI, which was valued at $230 billion.
That is just an unbelievable amount of capital moving around.
It is. And Tesla's recent $2 billion investment into xAI will now convert into a less than 1% stake in SpaceX.
This is all part of what we call the Elon factor. It's a double-edged sword, really.
Right, because on one hand, you have this potential for vertical integration.
Exactly. You combine SpaceX data, xAI algorithms, and Tesla's physical compute power, and you could create an unassailable moat.
But on the other hand, there's market sentiment to consider.
Yeah, the recent Benzinga poll was pretty revealing.
Oh, I saw that. 68.3% of investors said they would rather invest in SpaceX for the next 10 years over Tesla.
While only 31.7% chose Tesla.
That is a huge gap in confidence, and part of that might be tied to Musk's political involvement, like the DOGE initiative.
Right.
And we're not taking sides here, left or right. We're just impartially reporting on the sources. But the data shows this political involvement has caused measurable brand hesitation.
Yeah, it reportedly cost Tesla up to 1.2 million vehicle sales over 3 years.
Which is a huge hit when you're already losing ground to BYD.
Exactly. You can't afford to alienate buyers when your core business is already shrinking.
So what does this all mean? Taking all this in the shrinking EV sales, the AI potential, the regulatory hurdles, the SpaceX distraction, Where do the experts ultimately land on the stock today?
Well, looking at the consensus from about 33 to 41 analysts, the sentiment is surprisingly balanced.
Really?
Right.
Even with all this volatility?
Yeah, it's about 44% bullish and 33% bearish.
And what about the price target?
The consensus price target sits right at $387.79.
Which is almost identical to where the stock is currently trading, right around $380 to $404.
Right. So based on the current stock price trading precisely in line with its calculated consensus intrinsic value, the final verdict is a hold D.
Holt, okay.
Yeah, because the stock is currently a massive risk-reward coin flip.
Meaning it all hinges on the near future.
Exactly. If the March 9 NHTSA data clears and the cybercab ramps up in April like they plan, the stock justifies its premium.
But if timelines slip,
If timelines slip, that 210x earnings multiple will trigger a catastrophic re-rating.
wow, that is a high wire act. Which brings me to one last piece of the puzzle we haven't deeply discussed yet.
The Terafab project?
Yes. Set to launch on March 21st, 2026. Tesla is going to publicly launch its in-house semiconductor fabrication for the AI-5 chip.
That is a massive, massive undertaking.
Right. So I want to leave you with a question to mull over. If Tesla successfully starts fabricating its own silicon to power a global network of humanoid robots and autonomous cars, does the label of car company finally die forever?
It's a fascinating thought.
Or is this just another incredibly expensive distraction from their falling vehicle sales?
I guess that's the trillion-dollar question. Are they building the future or just trying to change the subject?
We'll have to see how it plays out. Thank you so much for joining us on this deep dive. Keep questioning the consensus, and we'll catch you next time.